Ooh, okay. It was a long week, or it was a long day last night from all that recording. Did you guys listen to it?
No, I haven't had a chance to go to it yet. Did you say it was like 3 hours or something?
No, no. I've been up on my computer for like the past 7 hours going into it, and then I was talking on the mic for 3 hours, so that's why I was just exhausted. But no, we had another person presenting from another group. He's a very good trader, but he trades differently. He trades supply and demand and price action a bit. So it'll go over a lot of people's head for that's new to the strategy. But for someone like me that I've got to know him for 3 years, that was the first time that I really got to talk to him and like hear about his strategy, other than just reading posts like we do on Discord.
Right.
That was nice
That's
for
cool.
me.
Yeah,
Yeah.
definitely want to check that out over the weekend.
Yeah, it's a lot. It's high level thinking, man. So don't be surprised if it goes over your head. Don't be worried about that. It's very high level thinking that he has. But yeah, okay. So this one we just want to talk about, go over the basics and stuff like that. I have some points I wanted to talk down. I think nice recording for us to talk about. So the first thing I wanted to cover is the imbalances. We need to understand who's making these moves in the market. I think we can all understand now and get that the banks and institutions are making these big moves. I think this is the daily chart of the EU, and these drops right here that you see, big drop, big rally, big drop right here, these rallies, all these drops, these aren't retail traders making these moves. So if we understand that these banks are finding selling opportunities and they're finding value at these levels where they're selling a bunch, well, we're going to take a probability-based chance that when price comes up back into the zone for supply or back down into the zone for demand, that those institutions are going to still look to buy because we assume that they did not get all their orders filled. It's the same thing in the book. I posted that same picture about how price comes into a zone first. We could assume that there's maybe 1,000 orders. Price goes up and then comes back down into it. We could assume there's not 1,000 orders in there. There's probably less orders because the zone's been tested, right? So maybe there's 500 orders or 200 orders. And then price comes back into the zone and then respects it a bit more. And then the third time that it comes into the zone, it breaks. That's the same concept as right here. It's in this demand and this supply zone right here. The first time it came in, let's just say that there was 1,000 orders, prices came in and out. What happened up here? Prices came into supply, a drop-based drop. Prices took control, came back down, back into tested demand now from over here. Prices came out of it, back up into supply. Prices in that range now. And then look what prices did after price came in for the third time. Broke because there were no more willing institutional buy orders in this area because they got filled. So that right there, what we just talked about, was kind of the concept of it and understanding order flow of the banks and institutions. We'll take a probability-based chance that if they saw value at a current level at previous time, why shouldn't they see value at it again? And we'll take a probability-based chance. And there's ways that we score the zone, like you guys have seen. There's ways that we score the zone based on how good the zone is. Is it really wicky? We don't want wicky zones. Is it a nice structure? How many candles are in it? How big was the imbalance? Stuff like that. So typically when I first pull up a chart, my eyes go to these big imbalances. My eyes aren't going to these bases. My eyes want to be going to this big imbalance. So it's the same thing with EU USD. If we go way back here into demand, this was the daily demand zone. Well, clearly, look at this demand zone. Drop-based rally, strong rally. This told me that there was a shit ton of buying orders. There was a lot of buying. These aren't retail traders making these moves. These are the banks making these big-ass moves, right? They control like 99% of the liquidity in the Forex market. And the retail traders, they really do nothing. They're not making these moves. So if price comes back down into this location, let's take a probability-based chance that they're going to see the same value at this level again. Now, there's definitely, like I talked about before, there's ways that we can talk about poor zones and good zones. Like, let's talk about right here, for example. This has been very wicky. Like, prices came all the way from down here. Just look at this one candle. Wicks all the way up here, came all the way back down. I don't see any good quality demand in here. This is just way too crazy to me. There's wicks like this right here. Would we call this a tradable demand zone? Like, technically this would be a demand zone, but look at this wick right here. Look what prices did before prices decided to make that imbalance. Prices had to go down. At one time, this was a big red candle where it had to go down and down and down in order to find the big stack of buy orders. So that tells me that there are no more willing buy orders until this bottom of the wick here. I think that was with the New Zealand. How was it with the New Zealand? There was that big flash crash. Where was it? Wasn't the Aussie? Yeah. So like this right here, when I see this big weekly candle, this wick right here, this opens up profit margin. Hey, if prices have to go all the way down from down here and then finally rallied up, this is opening up price. The only reason, or the only way that prices managed to come down here is that it took out every single buy order down coming down here. Maybe there's 1,000 here, and 1,000 there, and 1,000 there, like 1,000,000 here, right? It had to take out all those buy orders until this point right here is where demand finally stepped in, the sellers got exhausted, and then that's when we saw the rally out. So that told me that there was profit margin in this. There was no more buy orders until down here at the bottom of the wick. So that's what I wanted to first cover. And the second thing I wanted to cover is there's only 4 patterns we trade in supply and demand. There are rally-based drops. Let's go to, I don't know, gold. Gold has some good examples. There are rally-based drops right here. There are drop-based rallies. Let's say right here, drop-based rally, and then drop-based drops and rally-based rallies. So there's 2 demand patterns and 2 supply patterns. The 2 patterns that we call typically continuation patterns or CP patterns are known as, well, they're the rally-based rally and the drop-based drop zones. One for supply and one for demand. And those are typically patterns that happen in the middle of trend, in the middle of the moves. And then the rally-based drops and the drop-based rallies typically happen at the extreme of moves. Do you want to say something? Guys? No? You good?
Yeah, I'm good. Sorry. I'll mute my mic. I don't know if maybe...
No. If you want to say something, interrupt me. This is for you guys. We're just recording.
No worries. Yeah, I wasn't trying to say anything. You just been some like background.
Okay, well then keep your fucking mouth shut. Just kidding. All right. I can't swear like that too. This is being recorded. All right. So, like I was saying, there's a rally-based rally right here. This is a continuation pattern. Same with here. Now, typically, they happen in the middle of the moves, like I was saying, and then the drop-based drops too of supply, like right here, are known as continuation pattern. That's the other pattern. They happen in the middle of the move. And then the rally-based drop right here, that's a move that happens at the extreme. Same with here, drop-based rally, base rally, right? So those just typically happen at the extreme, and those are typically known as reversal patterns. Now, how we draw them is important. There's only 2 lines. It's very easy how we draw them. Is we have a distal line and a proximal line. The whole purpose of the distal line is we put it at the top of the wicks for supply, and then we start the proximal line at the meat of the orders of the basing. Now, we don't really want to be going wick to wick. I mean, that would be valid, but right here is we're trying to find the imbalance. Notice how the imbalance started right here. Well, you're kind of missing the whole imbalance if you draw it like that wick to wick. So you really want to be keeping it to the meat of the orders by drawing it to the bottom of the base and candle. Like not to the wicks, don't include the wicks, but you could draw it like that. Or if you wanted to, you could draw it like that. You'd be more picky and less prices might not come up into your zone by drawing it like that because you're always going further up into the zone. But it's going to be probably a better trade opportunity if you draw it like that or like that, because that's where the meat of the orders are being placed and not wick to wick. Same thing with drop base drop supply zones. This was a supply zone. And let me remove that. This was the supply zone right here. I could just put, I think this is where's bar reply? Let's go right here. Oops. Bar reply is not working. Okay, well, never mind, we won't use it. So let's just say, for example, these three candles weren't here. This was the drop base drop right here. This would be how we would place it. The top of our distal line would go at the top of the wicks, and the bottom, our proximal line, would go to the meat of the orders of where prices started to drop. I wouldn't want you drawing them like that. One, that's a very big zone, and look at the imbalance. This is where the leg out was. Notice the strong imbalance. Notice how prices closed. It didn't close like this candle, like this 50% candle, telling us that there weren't a lot of buyers in that area. So we would want to be drawing it like that. Okay? Same thing with demand over here. We have a rally base rally. We could draw it like that. If you wanted to, you could pick the wicks, but like I said before, up here, if you're going to keep hugging the wicks at the very extreme of zones, you're going to have a lot less trading opportunities, and you might find prices coming into the zone but missing your entry or missing your curve zone by doing that. All right. Same thing with drop base rallies. Quickly cover that. We had, say, a drop base rally right here. You wouldn't be wrong to draw it like that. I would personally draw it like that. And when we're drawing our proximal and distal lines, it gets reversed. So our bottom zone now will be called the distal line. And the way I remember that is distal means distance. It's the farthest zone. It's the farthest candle, or the farthest line or way, I could say. I don't know. You know what I mean? So if we were looking at supply, the distal line will be up here at the wick, at the top of the wick. And then for demand, it will be at the bottom of the wick. And our proximal line will be hugging the meat of the orders. See how these candles base right here? Now, I wouldn't want to be drawing it like that. That would be really picky. This is where the meat of the orders are, right there. So that's how I would want to draw it. There is some leeway in it, but this is really how we want to be drawing it. You guys have any questions about that? How to draw them?
No, I'm good.
Same thing with this. You draw them like that. Now, you guys, for practice, I think Chris was saying that he likes to sometimes go back and price, just randomly scroll, and he asks himself, like, hey, where are supply and demand zones, right? So it'd be like, okay, where are the supply and demand zones in this whole area right here? Well, it'd be very easy. We just look for the simple patterns. There's only 4 patterns we trade, right? Here's a drop base drop right here. It's going to get really cluttered with my line, so let me remove that. There's a drop base drop right here. You do have, this is really ugly. I wouldn't want to be calling this supply. Because notice the leg out, it just based, very base, and then we turned into the drop base rally demand right here. Drop base rally, notice the big imbalance. Here, rally base rally, notice the big imbalance. Okay. So all we're looking for is big imbalances and stuff like that. Now for us to call a zone a tradable zone, there's only two ways we do that. Well, one thing I want to touch about, because I know this was a problem in the group chat, was when these big wicks happen or anything like that. We already covered the wicks, but let's just say, for example, this, like, I don't know, let's just quickly find one. Like this right here. This would be a drop-face rally demand zone, but do you really want to be trading at this drop-face rally demand zone? Notice the wick. It's a big-ass drop-face rally basing candle. Notice the wick. Look what prices had to do. They had to fall all the way down in order to find the next stack of buy orders. Now, you're right. This would be demand, but is it a trade? Is it a zone that you would feel comfortable buying and selling at? It's not like a nice, easy, clean-cut zone like this rally-based rally, or you see this rally-based rally here, rally-based drop. This is a very large candle. Notice the size of the basing compared to the leg out. Your leg out, or the imbalance, should always be, 2 times the size of the base. That's typically what we want. We want the leg out to be 2 times the size of the base, and that's telling us that there is a strong imbalance happening in that location of supply or demand. So like this right here, this supply zone. Why is it a supply zone? For rally base drop. It also removed a rally base rally, which would make it a tradable zone. But notice the leg out. The strong leg dropped all the way down. This was a 2-to-1 move, 3-to-1 move, before prices decided to come back up into this supply zone. Now, if we were looking at this one, go back to this demand zone, this imbalance really didn't do anything. It was a basing candle that really wasn't convincing that it went up very far. So that's just something I'd recommend, is trading at these zones that have these big moves out that typically have a 2-to-1 move out of the zone. That will make it that zone that much better. Okay, and that goes for every time frame. If you're looking at your curve time frame or anything like that. Sorry, guys. To make a zone a tradable zone, this was a common problem I saw in the homework tab or questions. There are 2 ways, only 2 definitions or 2 ways that we need for us to call a supply or demand zone a tradable zone. Can anybody here tell me what those 2 are?
We got to take out the opposite supply or demand.
Okay, that's one.
Or break a momentum line.
Correct. So let's go to USD CAD. So USD CAD, in order to call a supply zone or demand zone a tradable zone, we need one out of the 2 things that need to happen. It needs to either 1, remove an opposing zone, or 2, break an upward or downward momentum line. So if you want to find a supply zone that is a tradable zone, it has to remove either a demand zone or break an upward momentum line. We're going to be covering momentum lines and trends and stuff like that in next week's lesson, or in lesson 2, which is next week's focus. But those are the only 2 things we need, and I recommend writing that on a piece of paper and asking yourself, did prices remove a opposing zone or break a downward or upward momentum line?
Awesome.
So, yes.
Would it matter if it removed the zone from, say, 2 or 3 months ago, a very old zone?
It doesn't matter. That's totally fine.
Okay.
Yeah. As long as it's a zone previously in place. It doesn't matter. That would make it a tradable zone. So in this case, this supply zone, how we would draw it is, like that, up to the top of the wick, to the start of the facing candles. You could draw it like that if you wanted. But what did prices remove? It broke a upward momentum line. And it actually broke demand down here. It removed this drop base rally, and it broke this upward momentum line by open and closing this candle right here, telling us that the momentum has started to change, which would then make this a tradable zone. This was already a supply zone or something that we like to call selling, but this would make it a tradable zone. I'm not saying you can just go up and start selling, just push the sell order, but this would make it a tradable zone. And right now we're kind of talking about a curve zone, and this goes for everything. If you're going down to your entry time frame, the same rules apply. How to draw them, what makes a tradable zone, the quality of the zone, that all takes place into our entry time frame, into our curve time frame. Okay? Same thing for demand.
One more question.
Go on. Yeah, no worries.
On your entry time frame, would you be looking, say you're on your entry time frame, you're looking to trade down to the next level on your entry time frame or on your higher time frame? Did you get me?
When you're sorry guys, I'm speaking too much.
Say you're at the top of your curve there on so you say your highest time frame is your daily.
Yeah.
And your entry is your hourly. So you take an entry at the top of the curve there on your hourly. Are you targeting the next low on the daily or on the hourly? You know what I mean?
When we're taking targets, we typically want to be taking our first target on our entry time frame, our first opposing zone, and then what we'll do to find our second target, if you're the trader that wants to trade two targets, is you'll go to the intermediate time frame or your secondary time frame and place it at the next opposing supply or demand zone. Notice how everything revolves around supply and demand zone. It's the exact same rules. I know you guys are being overloaded with a lot of information right now. It can get very overwhelming. I 100% understand that. But all of our rules apply to every single time frame that we use, or any time frame sequence, to our entry time frame, to our intermediate time frame, to our curve time frame. All right?
Yeah, that makes sense. Thanks.
So, for example, would this rally-based rally be a tradable zone?
Yeah, it would, yeah.
Why?
It's taken out an opposing zone there on the left.
Did it remove this zone?
It's removed. It hasn't removed that zone, no, but it hasn't removed the zone further left, though, has it?
What zone?
Drop base rally, probably back between March and April there. Keep going left. Keep going. There, drop base rally. There's a lot of candles. So.
Or this?
Yeah, that there, yeah.
So I'm talking about this. I'm talking about this zone right here.
Sorry, I thought you were talking about the zone above that.
No. We'll get to that. I'm talking about this zone. Is this a tradable zone?
Has it taken out the demand just to the left of it there, has it?
The demand or supply?
The supply, sorry, just to the left of it. Yeah, the drop base drop.
You tell me. I'm asking you. This is a test.
And so it looks to me like it has, just about, yeah, kind of.
Well, either has or hasn't.
Let me see. I'm going to say it has.
It has. Why would you say it has? It looks to me like it hasn't. To me, this looks like the drop. This is where the basing happened. And then this was the leg out. So how would we draw our proximal and distal line? We're going to draw our proximal line like that. And then our distal is going to go to the top of the wick of the basic candle.
Okay, yeah, no, it hasn't. Yeah, no, it's actually retesting it, kind of, isn't it?
So it hasn't removed it, has it?
No.
Okay, so would this make it a tradable zone?
No, it wouldn't be, no. There's a momentum line break, though, isn't it?
Where's the momentum line?
Momentum line, so we've got a rally.
Remember, we look for peaks and valleys for momentum lines. Do we have a peak and valley here? Draw our downward trend line?
I said that would be an aggressive downward line. What do we could draw there? No, we couldn't actually. No, sorry. We need three drop base drops. Yeah.
Correct.
So we've got Peak rally. Yeah, I think we could draw a downward momentum on there.
Where would we draw this?
So, the pity we can't draw on the screen. So,
From here down like that?
let me see, drop. We couldn't really, could we? No.
No, well, we couldn't. Remember, we looked
No.
for peaks and valleys. We looked for dips
Yeah,
in
no.
the market. We could draw it.
Yeah.
See how this candle right now broke this previous low?
Yeah.
We could draw it like this. Why? That's a peak and valley. We have that valley, prices rallied up and then drop. Sure,
Yeah,
but there's no pullback that we could use to draw a momentum line like that.
Yeah. I was saying an aggressive, but we need 3 or more zones, don't we?
Yeah, we need 3 in a row. That I talked about that in the homeworks tab. Let me see. I know I asked. Didn't I? Is it in general?
Yeah, no, I do remember you going over that already. You've actually went over momentum lines a good bit now because I think a lot of people. I think it's actually been the stickiest point so far in this course for most people.
Yeah, I don't know where it is. Screw it. But
no, I do.
It happens 3 base drops in a row or 3 base rallies in a row. That's typically known as the trend's overextended.
Yeah.
We'll talk about more of it next week. This week we're focused on lesson 1, okay?
Yeah.
We'll cover it in the Sunday meeting. Okay, so if we understand that prices never removed a supply zone or broke a downward momentum line, would this be a tradable zone?
No.
No, correct. So would this be a tradable zone then, down here? Drop face rally.
Drop base rally, and it's taken out a rally base rally to the left there, hasn't it?
It's tricky, isn't it?
It is. But when I'm reading the book,
been reading the book and then watching the videos and actually implementing it.
like when I'm reading the book,
you're going to be listening to this recording, 6 months from now, and you're going to be like, such an idiot.
I hope so.
So go to our rules. These are the rules you should ask yourself when you're placing your curve zones or your highest time frame zone. These draw out your supply and demand zones. So ask yourself, has this demand zone removed an opposing supply zone or breaken a downward momentum line?
Let me see. No, I don't think it has.
No, it hasn't. It's the exact same zone above it. It hasn't done anything.
Yeah. Where I'm getting confused there is the rally base rally to the left. I'm just trying to see if it's taken that out. It's a good bit to the left there. It's up back. It's near. Yeah.
No. This was taken out a while ago. This rally base rally was taken out way back here.
Yeah.
We don't look back here, man. Everything. This is when I go and tell you guys. All my analysis is done within the last 15, 20 candles. I rarely have to look all the way back here. The only time I look previously all the way back here is when I have to go down or up to find fresh zones. That's the only time. But here, everything that you need to know is right here.
Okay.
Is in these 20 candles. There's no need to go back here. We don't look at previously broken supply or demand zones. Okay?
Yeah, got that, yeah.
So I ask you now, is this supply zone a tradable zone? Look what prices did. Prices had an imbalance, right? And what did it remove all the way down here? What did it remove? Anything?
That's kind of just basing there, really, isn't it? The market sideways.
Yeah, it's kind of basing, but I'm sure there is some demand in there, right? There's demand in here, rally-based rally. But it's nothing great, but it is demand.
And to see the two big black bars there as well, just where you are there, the two rallies there. If you dropped to the 4 hour now, you'd probably see rally-based rallies within that, wouldn't you? But we're on the daily, so we're only concentrating obviously on daily zones.
Well, if we wanted to, we could do that. Go down to the 4-hour. You're going to see more candles, right? And what are you going to see? You're going to see rally-based rallies.
Yeah, exactly. So I actually asked you this question earlier, right now. Well, if my daily zone takes out a 4-hour zone, can I count that? But you said we couldn't. If we're working the daily zone.
Yeah, because you got to understand, if you're one daily candle is, I don't know, like how many 4-hour candles? Like,
exactly.
I'm horrible with math. I don't know, but it's, you're going to see a lot more 4-hour candles if you go down a time frame. It's the same thing. If you go to the 1 hour, you're going to see 24 1-hour candles, and you're going to see a whole bunch of smaller zones.
All right, I got you.
All right, so I want to keep it on less than 1. I want to get 2 into conversation. Let's try to keep the recording under 1 hour, but is that supply zone a tradable supply zone?
Yeah, it's taken out a drop-based rally.
Yeah, it's taking out this demand down here, right?
Yeah.
It's taking out anything here. It's, there's nothing great to quality in here. I understand what you're saying, and it's a little tough one, but there's nothing insanely great quality, but it did take it out, and so we would call this a drop-based drop. And notice the strong imbalance, right? So that's a lot of sellers there. Okay?
Yeah, nice move away from it, yeah.
So I ask you, is this supply zone, tradable zone?
Yeah.
Everything you need to know is right here.
Yeah, well, it's taken out a rally-based rally, but it's kind of it's a messy base in it. There's a kind of a long wick. I don't know if that matters or not. But it has taken out a rally-based rally.
It took out that demand zone, rally-based rally.
Yeah.
That's how we would draw it. I wouldn't want you drawing it like that. I want you drawing it out like that. There's no demand in there. That was a retest of this previously rally-based rally. Poorly structured rally-based rally. But yes, it did remove it. So let's go to another time frame. I don't know, U.S. oil. Okay. Here, this was the example of a three drop-based drops in a row. That would give us the ability to draw an aggressive downward movement. Well, let's not talk about that. I don't want to talk about trends, so we'll skip that one too. I don't know. Let's go with Aussie New Zealand, 30 minutes. Let's talk about this supply zone. Is this supply zone a tradable zone?
Yeah, it's taken out a rally-based rally to the left there.
Yeah, it's taken out this demand, and it's taken out this drop-based rally demand, right?
Yep.
Okay. Would we call this, let's see, this drop-based rally a demand? Sorry. Would we call this drop-based rally tradable demand zone?
No, it hasn't taken out any zones, has it?
It hasn't taken anything. You're right.
No.
What about this demand zone?
The drop-based rally?
Yes.
Yeah, there's a rally-based rally to the left of there. It's not a great zone, but there is one there.
It took out this, you mean?
Oh, sorry. Yeah.
Well, we don't take rally-based rallies out when we're creating demand, right? We take out drop-based drops or rally-based drops.
Yeah, I'm mixing my zones up. Yeah, no, I haven't taken out that supply there. I don't think it has.
It hasn't taken out this rally-based drop supply?
It has. It's moved right up past it, yeah.
All right. Okay, so this would be demand.
Yeah.
Okay, so now I ask you, it's going to be tough to see. Let's go to the 15 minutes.
When we're talking about it, an opposing zone being removed, do we have to remove the base of the opposing zone or the whole thing.
The whole
you know
thing,
what I mean?
not just the bases. You know, it goes to the top of the distal line and the proximal. Like, has to remove the distal line, right?
So the space between the distal and the proximal has to be removed.
It did. The whole zone has to be removed.
Okay, yeah. So the whole zone, yeah.
Yeah. Hold on 1 second. Okay, sorry about that. Let's quickly talk about. I mean, we covered it pretty much, man. It just takes practice to understand it. Well, that pretty much nails it. I don't think I should be asking you anymore. We could do one more for fun. I know we're spending a lot of time on this, but this was a frequent question. That's why I wanted to.
It's an easy concept, but when you're trying to
It's
put
a
it into
very
practice,
easy
that's
concept.
not that easy.
So would we say, obviously this would be supply, right?
Yeah.
Yeah, because it removed demand, strong move. It's clearly supply. Not every supply or demand zone works. Let's see. We call this a tradable demand zone.
I'd say too many candles, six or more candles in the base.
Yeah, there is quite a bit of candles, but never mind that. Let's just say, is it demand or supply?
So
And we're going to keep the zone like that. Actually, it technically should be. Yeah, we'll keep it like that because it won't change.
yeah, it's a drop base rally, isn't it?
The drop-based rally, but is it tradable? This is a tricky one. Really focus on these candles here.
Yeah, it's broken. Has it broken a downward momentum line?
Has it?
Oh, it's very close, isn't it?
Well, is it touching all these candles? Is any of these candles opened and closed outside of the downward momentum line?
I think the last red candle might have. No.
There's a wick. There's a wick that goes down into this demand zone.
Yeah.
It's a tricky one, man. It never broke it because this candle right here, actually, the wick went down into it. So it's still touching this downward momentum line. Let's talk about one more. Would we call this supply zone? That's a tricky one because there's a gap.
Yeah, well, we count the gap as a full candle body, don't we? So I'd say yeah.
Yes, and it removed this base rally, right?
Yeah, exactly. Yeah.
So let's talk about this one really quick. Would we call this one a tradable zone after the fact of this candle? Don't go past my arrow. Is that a zone? Tradable zone?
So we've got a rally-based rally. Rally-based rally. No, it's not. It's not taking out that rally-based drop. I don't think it is a tradable zone.
Awesome job. It hasn't taken out that.
Yeah.
So
it's taken out on the next rally-based rally.
Yeah, exactly. And then therefore, with this goes to our next thing we could talk about is zone inheritance. The concept of zone inheritance is if a previous zone did not remove an opposing zone or break a downward or upward momentum line, it's not technically a zone until a next zone removes one of those criteria. So here in this case, this rally-based rally did remove this rally-based drop supply zone, right?
Yeah, so the zone below it is now.
So now the zone below it is a tradable demand zone because it inherits the concept of it removed a supply zone. This is the same thing for demand too, right?
Yeah, that makes sense. I remember reading that. Yeah,
it's a tricky one to understand, but you just keep reading and looking at it, and it will slowly make sense. You know, ideally, these zones are better because they are those zones that remove the zone, than compared to the zone that was inherited. So ideally, we want to see these zones removing opposing zones. So that's like a really good thing we want to have. But it's not necessary if we had the concept of zone inheritance in this case. Okay.
And would you trade inherited zones much, or would you say?
I would trade it. I would trade it, but just do know if you had to prefer. You know, it's like if you had a girlfriend, would you prefer getting a girlfriend that's 10 out of 10, or you know, a 5 out of 10? Okay.
10 every time.
All right, you want to go? You'd go to the 10 out of 10. Even we're not saying this zone's a 5 out of 10. I'm just saying it's a lower probability.
Yeah.
Then this zone. This zone had to go through. Think about it. This zone had work to do. This zone had to remove this opposing zone, right?
Yeah.
Okay. So we could really just talk about that really quick as zone inheritance. So we've really covered everything. One last thing I wanted to kind of talk about is the stay away candle. And the concept of the stay away candle is when after we have the imbalance in price is when we have price stay away for one period of time. That's telling us that prices respected the imbalance. So if we look, for example, see, I can't use this bar replay. Why can't I use it? Maybe it's because I'm recording and it's just like screwing up. I don't know. But this rally-based rally, let's just, for sake, rally-based rally, okay? All a tradable zone. This is where this talking concept and theory here. This rally-based rally had this imbalance, right? Had a strong imbalance, and then what did price do right after that? It had a stay-away candle. The whole purpose of these stay-away candles are to show us that prices respected the imbalance. It's not like prices came straight back right away and then came back and tested the zone. If that happens, that's telling us that there was an equal amount of buyers and sellers in that area. So that goes right here. See this rally-based rally? This demand zone. We had that leg out, strong leg out, and then notice this next candle right here. Notice how it fell straight down. Let me, you guys can see. Notice how it came straight down. Sorry?
That's showing sellers there, then there's sellers.
Yeah, it's telling me two things. There is an equal amount of there's an equal amount of sellers in that location, and the buyers couldn't keep it in control. As strong as this imbalance was, the buyers stopped buying. The sellers came, at one time this candle was straight red coming back into this. So that told me that the buyers could not actually hold the imbalance by staying away, and that there was an equal amount of sellers in this area. So that goes back to my question, or no, my question that I'm saying is, well, if there really was an imbalance there, shouldn't the prices stayed away? Right? No. It's not like here. Here was a rally-based drop. Gap. Notice how prices stayed away and respected it. Okay? Now, sure, it didn't work. You can see how prices came up into it and tried to take over, but it eventually broke. That goes back to me saying not every supply and demand zone works. Here was another example where it didn't work. This was actually a level on top of level. We have drop, base, rally, base, rally. This rally-based rally, strong imbalance, and notice how prices respected the imbalance. It's respected it and then came back. So if we go back and find maybe some examples, they're everywhere, but I'm just trying to find a clean one. I don't know, let's see. Euro USD. I'm just trying to find an easy example. I could say, no, I don't use that. Screw it. Well, let's try to find a poor one, for example. You could say this. I don't want to say that because it's not a really great zone. This supply zone right here, we had that leg out, and then notice how prices came straight back right away. It's just any time that prices come straight back into a zone without staying away is telling me that there is not a strong enough imbalance in the supplier demand traders never held prices. So I don't know. Let's just see if I can just quickly scroll through. Here, right here. Even though it worked, and it's just horrible because a lot of the examples I'm trying to talk to you guys about it, they end up working. The ones that have the stay away candle aren't working, and the ones that do have it, or the ones that don't have it are working, and the ones that do have the stay away are not working. But here was this base drop, right? Big strong leg out, but then notice what prices did. Prices came up right away, telling us that there was an equal amount of buyers and sellers in this area. That told me that the sellers could not respect the move by staying away for at least one candle, telling us, okay, strong move away, prices have respected it, and this would be now a qualified zone. It would be like this zone right up here, this drop, base drop. Strong move out. Look how far this is, like a 3-to-1, 4-to-1 imbalance. Prices had that stay away candle and came back up into it. Just missed it and it worked out. Okay. That pretty much covers everything in lesson 1, guys. We literally went through everything. Who's making these imbalances, the 4 patterns we trade, how to draw them. We talked about quality zones, then looking at width and avoiding these big wicks, right? We want to keep these zones compact together, these basing candles. It's never a good idea when the leg out is going past or below the basing candles. So that would be like this, for example. Not the best one, but let's just say prices went down a bit more and then went up. Well, that's telling me that the leg out of the candle had to go down and find more buy orders. And that's never a good sign. I don't want people trading at those zones. That the leg out wick goes way below the basing candles for demand or goes way above of the basing candles for supply. Okay? So we covered that. How to draw and identify them, tradable zones and qualified zones. We talked about zone inheritance. We talked about stay away candles. We covered everything. That was like, 45 minutes. Is there any questions?
I think you covered everything. I'm going to watch this over again and read the book before I fall asleep.
I think this is going to be in the course material too. I think it would be a good video for throw in the course just as a review session. Yeah. And okay, you've read the book, you've read section 1, you've watched section 1 video, and then we just kind of review section. This would be something, I'm not sure where I'm going to place it. Maybe at the end of the course we could review, or I don't know, I'll figure it out. But I thought it was a really good session. These are sessions that I would like to have going with lesson 2 and lesson 3 is every week, or just because the first week we're focused on lesson 1, and the next week we're going to be focused on lesson 2 on trends and momentum. So it would be a nice recap because now you guys for the past week have been learning the strategy and I've been critiquing your homework and you're seeing how it works out. So just to have this review session, we'll be like, okay, so it's a good refresher. You see what I'm talking about more. You see these errors that you're making. You understand that you can make better zones, right? Oh, one last thing I wanted to talk about too was this was a common question that you guys were getting trapped up on, where if we want to identify fresh zones. Like I totally get that. But if we identified a fresh zone and then prices come up into that zone, we should be looking for selling or buying opportunities if prices are inside our curve level. We never really want to be trading at tested zones, tested more than twice. We don't really want to be trading at these zones. But to be honest, if you were the type of trader that opened up this chart right now, and I asked you, where's fresh supply above and fresh demand below? You'd be like, okay, well, this is supply, but it's been tested. Price is in it right now. So we would have to go above current price to find the next fresh demand and we have to go below price to find the next net. So supply above, demand below. Why is this demand? Well, it's a drop-based rally that removed the supply zone, so that would make it a tradable zone. Why was this one a tradable zone? Because we removed a upward momentum line, and we removed this demand down in here. So that would make it a tradable zone. At one time, this was supply. This totally is supply. Let me quickly remove everything. This was supply. If you were the type of trader that came to the chart 2 days ago, and I asked you, hey, where's fresh supply and demand? You would point to above this one and say, hey, I want to be looking for sells up in here. And we're just saying daily chart, this is your biggest time frame. This doesn't mean this is the biggest time frame for everyone. We're just talking about the daily time frame. The prices are inside your zone right now. You shouldn't be avoiding this. This is exactly what we wanted. We talked about this in the room today. I think I had this conversation with Alan too, and we want prices coming up into our supply zone or demand zone when it's fresh like it was, because now this gives us the ability to start looking for selling opportunities. This is what we've been waiting for, because before you were saying, hey, I want to be looking for sells if prices come up here. Well, if prices decide to come up there, that you'd be like, okay, I want to start looking for selling opportunities. Well, that's exactly what we have right here. Price is reacting right now off of this supply zone. And then when we have prices coming back down into this demand zone, we want to be looking for buy zones, for buying opportunities. If prices come straight down into it, it's not like, oh, it's tested, I don't want to trade it. Well, that's exactly what we want. We want prices coming into these demand zones, or so we can start looking for trading opportunities, okay? It's the same concept as USD CAD. There was a trading opportunity in the last couple hours. Here was the supply. If this is the current supply in control, well, don't you think that we should be looking for buying or selling opportunities right now? We shouldn't be avoiding it and saying, oh, I only want to trade at fresh zones and I only want to trade at this zone up here now. Well, what happens when price gets up there? We'll be having the same conversation we're having now, as in, well, it's tested. We shouldn't be looking for selling opportunities because we want to be selling at the next fresh zone. No. This is exactly what we want. We want to wait for zones, for prices to get it into our zones, to start looking for buy or selling opportunities. This is, of course, we're talking about confirmation setups. Unless there is a set and forget inside that zone, then sure, you could take it. But let's just say, for example, price is now inside our curve zone. We want to be looking for selling opportunities. This is the current, I want to say fresh, but say fresh, but in control supply zone. Because 2 candles ago, this zone was not fresh, was not tested. But now it's came up into it. Now it's in control. That's why we're starting to see those sellers come. It's the same thing. If price comes into this demand zone, I'd be looking for buying opportunities, right? So that's, I think, the last thing I wanted to cover. Is there anything else you guys want to talk about?
Well, you've covered everything for me, Austin. Pretty good.
Yeah, is there any questions, anything? This is lesson 1. This was the review meeting of lesson 1. No?
I'm good, man. You've answered all my questions. I appreciate
Okay.
that.
Perfect. Let me end the recording then.